Reaching you live from the city of Lagos, this is Abayomi Obabolujo with this episode of your Wealth Class Business and Stocks Watch. Good afternoon once again and welcome to the program. So we got a lot to do on this platform today, but you will do me a favor. There are lots of people that should actually tune in. Maybe they may have forgotten or they do not even know about it as yet. Please pick the phone. Anyone that you know had ever invested in the stock market and had lost a penny, or those you are still trying very much to encourage to do something for their life, young people out there that will need to be empowered. Quite a lot of people are out there, young people looking for employment. The stock market actually offers the opportunity to engage everyone now that the market also could be traded online, live. All right, so you need to get connected so that we do this wealth program together this afternoon. So I go straight to the performance of equities on the floor of the Nigerian Stock Exchange, today being the first trading day in the new week. And of course, we expect third quarter results to begin to get to the market from Thursday and Friday of this week. And when that happens, there should be lots of activities. Why? I think since from the beginning of this month, there have been quite a number of companies that have released to the market that their board meeting, principally to deliberate on the third quarter reports, they've started sending the report to the market that the board meeting will be held either 18th of October or 19th of October. And so it is expected that immediately after the board meeting to deliberate on the third quarter results should be hitting the market. Back in days, what we used to see was a situation where first brokers on the floor of the stock exchange will have access to results, and then it might take a couple of days, and sometimes the public might not even have access to such results until they are released to the public via the pages of newspaper, or maybe later in the week via the reports from the stock exchange. But the situation so much has changed that as soon as the issuers go to the portal, they release it, and the brokers can get it, having access to it at the same time that you and I will also be having access to such reports. We will take the time today to talk about the possibilities and also the risk you carry when you invest in, at least we'll create the time to talk about 5 Tier 2 financial institutions. Let me quickly tell you those that we'll be talking about today. They include Fidelity, we'll be talking about FCMB, we'll be talking about Union Bank, we'll be talking about Wema Bank, and we'll be talking about Sterling. Yes, there are about 3 or 4 of them that I just decided to still shun off for now. Maybe much later in the month, if they delay the release of the results till probably next Monday, we will still create the time to talk about them. But these are the 5 we are going to be talking about on this platform today. And I'm in the information market. I can tell you this is where you get the best of analysis, except you also get connected with me on the radio. Of course, that is why I'm the market oracle. So far so good today. The Ultra Index of the Nigerian Stock Exchange is down. As I can see here, 0.10%. I will later tell you why that is so. 0.16% is what the NSE 30 is down with. NSE 50 index is down 0.06%. NSE SM is flat. NSE banking is currently up 0.64%. NSE corporate governance is down 0.13%. NSE Consumer Goods down 0.92%. NSE Industrial Goods down, up marginally 0.01%. NSE Insurance up 2.12%. That should be about the best performing industry as we speak live now on the floor of the Nigerian Stock Exchange. NSE Oil and Gas flat. NSE Mainboard down 0.32%. NSE Premium Index up 0.16%, and NSE Pension down 0.17%. Now, as we speak, those equities that are leading in price performance on the floor of the Nigerian Stock Exchange include Mansard Insurance. Mansard Insurance is currently up as we speak maximum 10%. First Aluminium, National Salt, MPF Microfinance Bank, Union Diagnostics, all are currently up. Anything might still happen between now and when the market will be closing at 2:30 later this afternoon. Zenith is currently up 1.8%. That's a marginal growth that can easily still be wiped off. FCMB, one of those equities we'll still be talking about very shortly, is also up marginally 1.22%. Honeywell and Guarantee are those two equities that are still among the best performing stocks on the floor of the Nigerian Stock Exchange. So intermittently, while this program continues, we will be connecting with the floor of the Nigerian Stock Exchange to see what is happening, and you can be rest assured that it is our duty and responsibility to keep you updated while you take the action. So we go to what is happening now in the primary market of the Nigerian equity market. Quite a number of companies are preparing to hit the market very shortly. In the primary market, they include Fitsin Healthcare PLC. You had it on this platform last week that Fitsin will be hitting the market very shortly with a right issue. We all should be prepared to invest in that right issue. Also in the same vein, May and Baker, another pharmaceutical company, is also preparing to hit the market very shortly with a rights issue. Lasaco Insurance PLC and quite a number of other insurance companies will at this point in time be gearing up to hit the market with one form of instruments to raise additional capital or the other. Why? Because everyone is now working to show up its capitalization so as to be grouped either as Tier 1 insurance company or Tier 2 insurance company. Many of them that will not do that will have to make do with remaining at the bottom of the ladder and begin to operate or continue to operate as a Tier 3 insurance company. When you operate as Tier 3 insurance companies, there are insurance risks you cannot undertake. There are high net worth businesses that you really cannot undertake. So your profit is not even profit now, your turnover becomes very slim. But if you are Tier 1 insurance company, you can undertake any form of risk. That is what NICOM has instructed, and all of them are just playing to this. So for Lasaco, what it has announced that it intends to do is to come to the market to float additional shares. All right, when it is the time to do that, because I think just last week there was an extraordinary general meeting where their shareholders got to ratify that that plan. All right, Wema Bank PLC will also still be talking about Wema Bank very shortly. As I told you last week, or was it the upper week, when we talked about Wema Bank, they are already hitting the market with a bond. This time around, not for retail investors. As a matter of fact, it's not going to affect the outstanding number of shares, because one thing we need to know is that when you come to the market to raise additional funds, if you are not able to effectively utilize the fund, it affects your performances going forward. But in the case of Wema, it's not going to affect their existing outstanding number of shares, because what they are coming to do is bond. As a matter of fact, when you talk about bond, that is the market where those who have nerves, organizations with backbone, that is where they dwell, in the sense that if you are coming to the market with a bond, it has to be collateralized. It does suggest that you have enough assets to back up the bond you are coming to float. Because what happens is that if you are not able to pay, the assets with which you have collateralized the bonds will have to be sold, such as to pay up for the bond. So that is why if you are a bond investor, you can never lose. It is a riskless investment. But as much as that is, the income, the yield would be very fixed. So when you don't have much risk, you don't have also much returns. But that is where Wema Bank is looking at. And they are also targeting institutional investors to pick up the bond. I spoke about insurance companies earlier. ICO also is hitting the market with a special placement, or you want to call it private placement. Also, NEM Insurance PLC. Now we go straight to those equities that made the market active last week, talking about the highest percentage gainers. Wema Bank PLC led the market last week with a growth of 17.86% year to date. Wema Bank has recorded 26.92%. But the bank still, the price of the stock of the bank still has the capacity to move up, because so far so good this year. We have seen it at a price of 1.54 kobo. Now we have also seen it at a low of 50 kobo, selling at 16 kobo, with what we are seeing as possibility in the third quarter reports. The possibility is still there that the price might still go up a little bit more than the current level. And you see this kind of reports, this kind of performance, even in a low market, in a declining market, you give it to the organization. When I get to the point now, when I begin to review the possibility, or when I begin to preview rather the possibility in their third quarter reports, we get to talk a little bit more. CAP was up last week 15.99%. Right, it currently says at 33 naira on the floor of the Nigerian Stock Exchange. Mutual Benefit, Niger Insurance, Cornerstone, Wapik, all of them insurance companies also grew in price on the floor of the Nigerian Stock Exchange last week. Another one which is more in the agricultural subsector of the market grew 9.02%. Last week. Year to date, it is generating 17.89%. But you see, in the case of Niger Insurance, despite the fact that it grew 10% last week, year to date, it is still down 34%. Not a good stock that I will tell you to invest in. Mutual Benefit, despite 11.54% growth last week, year to date is down 42%. When you see such equities rising, please be wary, be careful. It is one thing for you to enter into a stock because you see the price rising. It is another one for the equity to be liquid enough, because you see every investment you undertake today should be against an expectation, and one of such expectations should be when you will be ready, when you will be willing to sell. Will there be buyer? We are not talking about equities that will emerge as gainer today 1 week, and then the following day, the following week, then it goes down, and then we now remain stagnant in price for the next 3 months, so that when you want to sell, you get hooked in there. There's nobody to buy from you, and you have no choice than to continue to hold. And in most cases, such equities will have to begin to experience decline in price until it probably gets to the price at which you bought. Then you will only with your eyes have seen that the price moved up, but again, you are not able to get any return from such equity. So I always advise, in the stock market, you've got to shine your eyes. You must be wary of what you are buying at any point in time. All right. For example, Cornerstone Insurance PLC was up 10% last week, but year to date it is losing 56%. Can you imagine that? All right. In the case of Wapik, it gained 10% last week, but year to date it is losing 12%. Now to begin to talk about the third quarter reports. Now, what I use as basis, because sometimes I read, for example, this morning I read the reports. So many institutions these days try to recommend stocks that you should buy, and the one that I read this morning was mentioning a number of equities, and they are telling you the price you should buy now, and then the target price, and then you stand to grow in price if you stand to gain, you stand to profit 75% if you go to buy now. And I smile. Someone is promising you 75% in a down market. Somebody is promising funny analysis, and there are many of such in the market. The oracle really does that. I will not tell you that. What I do as basis of buy this, buy that, is look at the figures. Now listen, I might tell you one equity is good because the figures that I can see are very, very good, and the market is discounting it. It doesn't matter, all right? As a matter of fact, I can tell you to buy more and wait for as long as the good reports that I've seen, upon which my recommendation is hinged, for as long as they remain intact, you do not have anything to fear. Ultimately, you stand to make your money. That is all I know in all the trainings that I've attended across the globe, and I've spent a fortune attending training in all the close to 30 years I've stayed in this market. That is the best that I think can happen. And so what I use in the analysis that we are going to be showing now, it's not very rigorous activity that you cannot do. It's just like counting ABC alphabets, or 1 2 3, all right, numbers, not complicated statistical analysis. No, just mere observation. But you will need the ability to collect data just in earnings. Not many of them that I would even say that these are the reasons behind, but some I will do so. And this is basically what I have done on the pages of StocksWatch newspaper today. Please go and get that paper, because on the pages of StocksWatch, you will have access to information beyond what I can stay within 1 hour on the television and do. As a matter of fact, if I stay too long here, it becomes boring. You want to do some other things, for goodness sake. So call those numbers now, ask your vendor, and if the vendors say one thing or the other, because we decide not to distribute so many of them, otherwise, how can I continue to spend a fortune to publish on weekly basis, and yet the vendors will not bring money, they will not also bring the unsold? All right? Even if Dangote does that kind of business, I don't think he will still retain his position as the richest man in Nigeria or richest man in Africa. So there are many vendors who have decided not to give StocksWatch because they cannot explain to me, if the paper does not sell, return the money, return the unsold. In this case, they will not return the unsold, they will not return money, and so how do we survive? So call those numbers. But what you will be reading on the pages of StocksWatch weekly newspaper today are those equities that are currently selling at their lowest price in the year, and then we will show you the relationship between the current price and the lowest level in the year. Go and get that paper, buy it. We have also introduced another column that will address those who are not too versed in the knowledge of equity investment. Equity investment for novice is there. Please go and get it. And also the column called Oracle. Of course, Abayomi Obabulijo is the Oracle. Some people might call me Abayonomics. That is all my name, all right? So you get it and you will see the details as to what risk and opportunities you carry when you invest in some of these tier 2 financial institutions. And I decided to start with banks because almost everybody own one bank stock or the other, because between 2005 2006 quite a number of them came to the market and then they flooded everywhere. And today it is either that your son, your daughter, your sister, your brother, or your church member, or your in-law, or a family member, or your classmate works in a bank, and then they pushed you to invest in some of these bank stocks. Back in days, what is happening to them? You need to get that paper. Now, PEG ratio is what we use. Of course, there is a comprehensive write-up on the pages of StocksWatch newspaper. PEG ratio will tell you the relationship between the price to earnings and the earnings expectation of the organization. It should actually be 1. If it is lower than 1, it suggests that the organization is underpriced. And then if it is higher than 1, it suggests that future possibilities have been built into that. Let me start with FCMB. The table that will be shown on the screen now comprises of the earnings first quarter, second quarter, third quarter between 2013 up until the second quarter 2018. 5 years. If you want to say 6 years. But if you take time to look at what we have done here, just the earnings. We didn't produce this. We didn't generate it. The organization generated it. But they generated. How many people in Nigeria do take the time to analyze and let these figures speak, because they speak? In the case of FCMB, you will see between 2013 in the first, second, and third quarter, there was growth up until 2015. As a matter of fact, the 2013 first quarter earning per share that was just 22 kobo had grown to 1 naira 7 kobo in 2015. The second quarter had grown from 47 kobo to 84 kobo in 2015. But how come that in 2013 the third quarter was 67 kobo and then their earning per share had declined to 13 kobo? When you now get to 2016, you will see that the earning per share for the first quarter had started degenerating, was now 33 kobo. Of course, there was growth in the second quarter and the third quarter. But by the time you get to 2017, either first quarter, second quarter, third quarter, all of them were below what was reported in the entire of 2017. All right. Now, that was when the issue came up that there was NNPC unremitted funds with this, the bank component of the financial institution. And so between then and now, I guess they have been strategically paying back. But from what we have seen in 2018, first quarter was more or less the same as what was reported in 2017. But second quarter grew significantly to 57 kobo from 30 kobo. As a matter of fact, what FCMB gave or reported in second quarter was already higher by far than what it reported in the third quarter of 2017. And so what is the possibility in the third quarter? Putting all this together, the relationship between the first, second quarter, first to second to third, and the second to third, and all those, right? What the possibilities are for the third quarter report is 65 kobo, just a little bit higher than what was reported in the second quarter. At a current price of 1 naira 64 kobo, if you calculate the PEG ratio is going to be significantly low. And that suggests that if they are able to achieve 65 kobo earning per share for third quarter, of course we have between now and the end of the month to say this, the company will be performing well enough. But the risk, NNPC unremitted funds still remain with this organization. How far can they go? Let me go straight to Wema Bank, all right, on the in the table that we'll be showing you now, you will see that Wema Bank could not be said to be consistent so much, from 12 kobo to 3 kobo to 4 kobo. That is 2013. But you see, this bank has the spirit of what I call never say die. Why did I say so? If there is one organization you should watch very critically and probably hope to invest in, if you are not doing so now, is Wema Bank. Why? You look at all the other financial institutions that were established by the regions back in days when some of us were yet to be born, though I was born then, all right? It is only Wema Bank that is still alive. So I call it the cat with 9 lives. And since 2001 till now, I've monitored Wema Bank. In the last 8-9 years, the managing director that just retired in the organization has done everything humanly possible to ensure that this organization is rebranded. This logo is a new logo. That was not the logo or the color of the Wema Bank of old. And he has done everything to position and reposition this financial institution. Not that alone. You know that even in the last couple of years, they were National Bank. At a time, they reverted back to Regional Bank. All right. And then they recapitalized again, came back as we speak to become a national bank. When I say national bank, not a bank that is owned by Nigeria, but a bank that is licensed to operate all over the country. All right. Just like some of those other financial institutions. That is Wema Bank. However, from what we can see, the first quarter of this year was positive. The second quarter was positive. The result we are expecting is actually the last that was probably worked for by the retired managing director, Mr. Oloketuyi. A new managing director has come in, and so they are floating 20 billion naira working capital. The shareholding structure of the organization is now totally different from what it used to be. If they can achieve 6 kobo, just 6 kobo earning per share for the third quarter, as I project here, you will discover that the current price of 66 kobo could still be said to be low, which means that Wema Bank still has the possibility of growing higher. But one thing is this: NNPC funds that make some other tier 2 banks, and as a matter of fact, 1 or 2 tier 1 bank, become very risky, is not in Wema Bank. No encumbrance of such. And so, if you get a copy of Stock Search Weekly newspaper, you will see far more details in there. Let us look at Fidelity Bank PLC. Fidelity Bank PLC is very, very consistent. Yes, I also have monitored Fidelity for quite a number of years, particularly when Reginald Ejeahi was the managing director. All right, he handed over to Nnamdi Okonkwo, who is the current managing director, and we could see that from 2014 up until the time the issue of NNPC unremitted funds became an issue, that financial institution was actually growing on its earning per share, particularly from 2014 and 2015. But 2016, things began to look down. But from 2017 till now, with second quarter report of 41 kobo, my projection is 60 kobo. They can actually go as far as 70 kobo. But if they are able to achieve 60 kobo at a price of 1 naira 88 kobo, irrespective of whatever is happening in the market, Fidelity Bank will not be a bad buy. However, the risk you carry, repayment of NNPC unremitted funds, will continue to hamper future growth in their earnings because the money is already in their kitty and they will have to pay back. Sterling Bank PLC, Alhaji Adeola left the bank. I think he retired sometimes last year, and his chief financial officer took over. His name is Abubakar Suleiman. From what we have seen, if not for this year, I will tell you to see sterling on the floor of the stock exchange and ignore, because the results emanating from that organization had consistently declined from 17 kobo in 2013 first quarter to 15 kobo, then to 14 kobo, to 9 kobo, then to 7 kobo. All right. And then you come to the second quarter from 38 kobo to 26 kobo to 19 kobo to 14 kobo, then to 13 kobo. You should ignore such. All right. The price will not respond positively because the result has not been positive. Then we come to the third quarter report. From 32 kobo, they gained marginally in the following year to 33 kobo, and then they began to decline to 26 kobo to 19 kobo. All right. But last year, they managed to do 21 kobo. But from what we have seen this year, the first quarter and the second quarter was very positive. And then the performance at the second quarter was already slightly higher than what we saw for the third quarter of last year. So the projection is 30 kobo. If Abubakar can release 30 kobo earning per share for the third quarter at a price of 151 kobo, it might not be a bad buy. But again, the risk, NNPC unremitted funds. I come to Union Bank, which is where we'll be rounding off this segment. Get a copy of StocksWatch weekly newspaper, and all this you will have access to reading in a much more elaborate manner. You see, Union Bank used to be big, strong, and reliable. Well, they are still big, maybe. They are still strong, maybe. But reliability may be to their depositors. But to those who invest in the equity of this bank, never. They are not reliable. Because if you look at the figures emanating from this organization, from first quarter since 2013, it has been declined year on year. And then you come to the 2013, except when it was broken in 2016, it went up a little bit, and then 2017, but again they are back down because they reported 34 kobo second quarter this year from 54 kobo last year. And if you go to see their third quarter, you will see that it climbed to 77 kobo in 2015. Right? But in the following year, they could not add to it. The following year, it declined. And then what do we expect this year? Definitely lower than what they reported, except if something happened. A miracle. All right? We hope to see that miracle in Union Bank. But other smaller or younger, I wouldn't say smaller, younger financial institutions had since left Union Bank. All right? To become, as a matter of fact, they are not rated as we speak as Tier 1 financial institution. To such equity, you've got to be careful. You invest in such equities where you can see consistent growth in earnings, where you can close your eyes and invest, knowing fully well that the earning will grow, because investment is always made against an expectation. The oracle has spoken. I think I've led enough. The rest is in your hands. Go get StocksWatch weekly newspaper and buy. We will go on a short break. When we come back, we'll be talking about you and your health. Don't change this television channel, because I will be right back.